are at a very interesting
Chat, chat,
point.
chat,
They've
chat,
had
chat,
a
chat, chat.
great run.
What is up, team?
So I still
Let's
am
get
bullish
this
long term.
message out to different
Financials look a little
places.
weak
How
too.
we doing? Hope everyone is
The
doing
thing
well.
that's
We're on
got me a
Spaces for
little
Power Hour.
worried is that this rally. Look at the Dow. It's almost down 5%. That'll be the second 5% retracement in the Dow in the last 8 weeks. And then you look at the S&P 500. The S&P 500 is really up. NVIDIA was 40 points 2 days in a row in the S&P 500. 40 points. That's insane. And the index was up a point each day. Today, it's not holding it like it should, and the S&P is down 32. And it looks like we could be, looking to retrace and test the 100-day moving average, which would be 50.75. That would be a little excessive. We'll see if the PCE dictates that sell up, but that would be another 5% correction. If we get 3 of them a year, we're going to get 2 in within 2 months. That would be something, but I don't think it's too shocking. We're in that time frame. The summer slowdown, we didn't have that catalyst to take us much higher. I thought, and I was wrong, I thought NVIDIA would be the catalyst to take the whole market higher. It just worked with some certain technology stocks, semiconductor stocks, but the rest of the market shrugged. And that was a little telling to me. And if we do get a pullback, which I suspect we will get a little bit of a pullback at some point as we get closer to this split on the 10th, that the market may pause.
Jim, what's up, man?
We've constantly seen.
Welcome, Nick. Hello. I appreciate you guys being here.
Excited about his rotation in this market.
I'm just getting started. We're live.
Gone into
we chilling.
Semiconductors, some big name technology. Maybe that's the case. But I see near-term weakness, and I think we're going to go sideways for a little while, and we may be in the process of yet another 5% correction. But overall, yeah, I do think it will be a buying opportunity, but this right now has got me a little concerned, and I don't think we'll get that catalyst until PCE on Friday. If it comes in, a little hotter, then, we should suspect that the Russell can get weaker.
Should be able to hear them pretty well. Hope everyone's doing well.
I don't have it in front of me. So I'm not ready to jump in. Those that had NVIDIA, some of these tech stocks, kudos. I would be trimming a little bit and having some dry powder just in case this gets a little excessive.
Should be a good chat today.
And overall, it's the summer slowdown is beginning. And if you're going to sell in May and go away, I think that would have been a day or two ago. But that Thursday candle, if you were to picture it, I can't share it with you guys. I apologize. But that Thursday price action to me, the day after NVIDIA, the first day of NVIDIA trading after earnings, was telling. And that's a bearish engulfing candle. We've had 4 of them now in the last year that are sizable. This one has not resolved, but 2 of the 3 have resolved down with 5% corrections. So what you want to watch in the S&P 500, and this is all technical jargon, so if you're not a technician, you hate technical analysis, you may want to tune away. But when I look at that candle, we tested the low of it today. We bounced a little bit. But the low of that candle was 52.56. So let's say 52.50. What was today's low? Today's low was 52.62. So we're still within the range of that candle. It has not resolved. Usually when you get an engulfing candle, the resolutions happen quickly, sometimes the next day. But those 2 or 3 instances that I talked about, one was in July, sideways for 3 days before breaking it. The other one was April 4th. We went sideways for 4 or 5 days before breaking it.
Guys, my computer's being so much worse than normal. Holy hell.
3 with a chance of breaking it.
Interesting story here, though.
Today, over the last 30 minutes or the next hour. And I think right now the short-term momentum has us going a little bit lower, testing the 50-day moving average, which is 51.78. And if we get that 5% retracement, we held the 100-day last time on a 5.6% retracement. I wouldn't be shocked to see another little pullback. And then when you go through it, that's when you get a little nervous. And, the bears may come out. But it would be apropos seeing some of the bears that capitulated and raised their target without naming anyone in particular, that raised their targets to 5,100, 50. 200. All of a sudden, that was coinciding with a near-term top. Not the end of the world, but we're gonna pause. We're gonna consolidate for a little while, and we're gonna wait for that next catalyst. It could be the PCE. If it comes in cooler, then oh my God, we're gonna get that cut, and we'll probably get a rally. But I think it's going to be in line. Everything dictates that it will be based on unemployment numbers, based on the CPI numbers that go into this calculation. And I don't think we really have that next catalyst. We got some fun earnings today. Salesforce. I talked about that on the Schwab Network. Who's here from the Schwab Network?
Kevin. Kevin's normally here, but
yeah, I know. I was about to give Kevin some shout out, but Salesforce hasn't really moved the needle. It has traded up 4 of the last 5 times. But in that space,
Jim, boring day in the market.
Peers,
boring
peers,
day.
Adobe,
A couple names that had good days. NVIDIA was pretty strong.
Not moved the needle. We'll see if Salesforce can. When I look at that stock, I see us testing support levels before all of a sudden a turnaround, given the recent momentum in the stock. And then the one I really think is going to be interesting to watch is Thursday afternoon is Costco. If you recall, Costco was down. I'll just refresh your memory. It was down a little over 7%, worst day in 2 years after last quarter. And not only did the stock slowly rebound, it made back that gap down and is now trading at 52-week highs. And what we're seeing is a definite bifurcation in this market between haves and have-nots within specific sectors. You can look at, Starbucks. Is Starbucks a staple or discretionary? I get my staples and discretionaries confused. This is a Brian Lund topic, but Starbucks was beaten down, but Dutch Bros, oh my God! So the consumer's still buying coffee. They're changing their habits, and you see with the food stocks, McDonald's.
Welcome
down,
to the chat, everybody. So we got 9 concurrent viewers.
Kava, what a reversal!
The guy who's talking right now, his name is Jay Woods. He's been on the floor of the exchange forever, the New York Stock Exchange. Good guy to listen to. He knows what he's talking about.
I think Costco falls more in the Walmart category than the Target category. But watch this. This is what they're not talking about. If they raise membership dues. The reason the stock was down so much last quarter was because they didn't raise their membership dues, and a lot of people thought this was inevitable because they want to price it down to the consumer. Well, we've seen some rollbacks in Target, we've seen some rollbacks in Walmart, and we could see them in Costco, but it's been since 2017 they've upped their fees. They have a loyal fan base. It wouldn't be shocking to see them do that, and that could keep the stock up. Besides the fact they're probably going to beat earnings, and revenue should be in line or better as well. So that's going to be an interesting one to watch, how people react to Costco, because right now I think that's a stock in the have category and should continue to go higher. It's trading at 52-week highs or a day off of 52-week highs. So it'll be interesting to see. And those are the things I'm watching as we go into the PCE. But technically, this is the price action's been really negative on earnings day on Thursday. Last Thursday, I think 90% of the S&P 500 was down on NVIDIA day, and that candle has me concerned. And if we don't hold the low end of that candle, that I'll give you the exact number, 52.56 level.
Roku on this list.
I suspect we'll be taking a ride down to the 200, the 50-day, and the 100-day. Not the end of the world. These things happen in bull markets, but when you live through them, it sucks. That's all I got.
Costco earnings should be interesting tomorrow. I was looking back at the previous times they've raised their annual membership, and it just based on the past, the future does not equal the past. But it's about time. They're probably overdue. I think I was looking like a 5-6 year cadence, and 2017? Yep. We're on the 7th year past that.
My data showed 2017, but it could be 2018.
I saw 2017 too.
Yeah, watch the hot dog. Will they dare ever raise the price of that hot dog? That's as stupid as this sounds. Can you imagine the market will react to that some way, and there'll be headlines all over the place about it. But it's a juggernaut. That's for sure.
Jay, as someone who kind of plays in that space a little bit, the amount of clicks already that would get of tweeting about it going down. Going up in price, I could tell you that would be mayhem at least on FinTwit for a day or two.
Yeah, it'd be fun. It'd be fun. They
It would
won't
be
do it.
fun.
They'll never touch that. No way.
We've seen like a lot of companies actually kind of going the other way with prices. It's been interesting to see Walgreens this morning announced they're lowering the prices. I think it was like 1,300 everyday items, and another company, whether it's Walmart or Target or someone, did something similar. We're seeing in the kind of fast food areas, McDonald's and Burger King kind of going in and starting a whole like $5 value meal trend. So it's definitely been interesting to see the kind
Wow.
of hearing about the consumer and how they might be struggling a little bit. So
Yeah, wow, that Walgreens story I didn't see. I just punched up the chart. What a disaster!
yeah.
You want to look at that perfect downtrends? That's the one, and everyone.
CVS too is following a similar
Oh
pathway.
man,
Ugly.
I know, and I spend a lot of money in CVS. I don't know how they don't do so well, but yeah, the drugstores have been disastrous. New 52-week low, although we're getting a little reversal closing. It's trading at the high of the day. CVS trying to reverse. Maybe this was a little trap here. I don't know, but Walgreens, my God.
Yeah, by the time I saw the runners, I
Dow
felt like I
stock,
was chasing. So
I
after that, I
read a
don't have any
story, I
conviction
think
in the
early in the
trade. I
week,
don't
that
feel
the
like I'm
Boots
chasing. No,
Alliance
yeah, that
part,
makes
they may
sense.
be
You don't have to
getting
trade every
rid of
day,
that.
Jim. It's good to
That's
take a day off.
London-based, so anyway,
We'll talk more about Salesforce
yeah,
as we get closer.
that stock is a disaster. All right, let other people talk. You got a great panel here. I'm listening to Brett and Brian and Shay and or is it Shy? I apologize. I see it's spelled Shay. It's Shy, isn't it?
You know what though?
But
I will say, literally everybody who comes in and meets Shy, it's always Shay, and then eventually, as they're on, it goes over to Shay. But like to Shy, I've heard every single time though, so you're definitely not alone in that
but
area.
if you know Shy now, that means you follow him and
Yeah.
appreciate his content. So let him talk. Let everyone else talk. I'm gonna listen in and look at CVS and Walgreens charts and try not to puke.
Rough times in those areas. I'm looking at the 52-week low list, and you can bet some money that those names are on there, and some of their bigger ones. Also, Las Vegas Sands and Caesars on this list, Bristol Myers, Cisco, etc. So, even though the markets have been pretty strong recently, there's definitely some names hitting this 52-week low list. Roku and Unity Software, some diverse names. Robert Half, some job companies or whatever. They do temporary work. I'm going down a tangent. Brian Lund, please save me. I would love to hear your thoughts on the market today, what Jay Woods was talking about there, and how you're feeling.
I can relate to what Jay was saying about Shay because people always mispronounce my name. It's actually Brian, not Brian, so get it right. Look, I'm just getting back from vacation. I was on vacation all last week.
Chat. We were having some word fumble there.
Portfolio Accelerator
We'll talk about Salesforce as we get closer to it. I'll ask some questions to the crew as well.
I had my finger a little bit on the
Salesforce,
pulse of the market. And in fact,
Earnings
when I was
Hub,
there on Thursday
Salesforce.
last week, we saw, Jay just stole my
numbers out of 4 p.m.
thunder
Eastern.
here,
Here's what's expected.
We did see that big bearish reversal bar.
Big bearish reversal.
Well, actually, technically, it
Chad, I'll
was
be back in a half a minute.
on the SPX, almost on the Qs, and then just big, down bars on the Dow and the and IWM. And so I think that's really what we got to be focusing on in the short term. How do we resolve that bar? It's not technically, like Jay said, it's not technically bearish reversal bar until we get a close below it. And we haven't seen that close below it on the SPX or on the Qs. But we're still in the middle of it. We're dead smack in the middle of that big bar on the Qs. We're at the lower end of it on the SPX. If we look at IWM and Dow Jones, they both rolled over. I mean, you could make the case that both of those have just put in double tops. Now, that could just be a short-term double top. I'm not saying that, we're going to crash, but they are double tops. I mean, the Dow Jones almost looks like a false breakout. We've got the Dow and IWM are below their 8. They're below their 21. They're below their 50-day moving averages. I use the EMA. So we see IWM just breaking below that today. So we've seen the Dow and IWM roll over, start to go lower, possibly put in
that might have been a little quiet.
Term. We're seeing the SPX weak at the bottom of that big
HPQ.
bearish engulfing bar.
Not that good here.
The only thing in the market that's really still holding it up is tech, the Qs, right? So in that scenario, you got to ask yourself, what's going to happen? Are we going to see the Qs magically hold up the rest of the market? Could happen, right? Or are we going to see the Dow, IWM, maybe start pulling down the SPX and then start pulling down the Qs? I think one of the interesting things to look at is some of the macro indicators. Now, I'm not a big macro guy, but there's 3 different things that I follow. 3 or 4 different things I follow on the macro side. One of which is the VIX, right? The VIX sometimes works, sometimes doesn't. We had this debate at the conference last week. Sometimes it does give you some signals on the market. Sometimes you go, what the hell is it doing? We got a gap up today.
Little boring
right?
day, though. I can't lie.
And it gapped up, from this area down around like 1180 that we also hit back in December. So get a little pop in the VIX. We've got Dixie, right? The U.S. dollar index, which is getting a pop today, right? Which had hit the 200-day moving average recently, but seems to be moving up from that. And then we've got TLT, which is down quite a bit today and yesterday. And I posted a chart into the Nest. The TLT is still showing a series of
the 52-week
lower
high
highs,
list is very
right?
low.
It looked like it was going into some sort of channel, and maybe it would break out of that. But right as of now, it is showing lower highs. So
I hate
up
that it
is
doesn't
generally
delete this.
bullish
Come on.
for the market. That's how we've been coordinated recently. But we're going down now. So the first thing I'd be looking at is, okay, we've got those 3 macro things that are kind of leaning on the bearish side. We've got, IWM and the Dow, which are looking weak, at least short term. And then I would throw in with that XLF, because the difference the last time we were seeing some market weakness is XLF was charging into new highs, right? It was very strong. The XLF is also, in a potential double top or a false breakout. Again, just short term right now, but we are edging below the 50. So I agree with Jay. I think there's, at least in the short term, some caution warranted. And I really think it's going to just depend on how we resolve that day from last Thursday. That was a really important day from a short-term technical standpoint. Big spike in volume on that day. And so we're also going into, like Jay said, Jay said everything I wanted to say. We're going into the summer months, right?
I'm sorry. I apologize.
That's all right. You're my buddy.
Sorry, Breon. I apologize.
That's okay. So, but we're going into the summer months. And, sell in May, go away, come back St. Ledger's Day, a whole thing, right? The last 5 years, I remember saying to myself at the beginning of the summer, I should just take the summer off, right? And of course I didn't. And almost all those summers, I just ended up getting chopped. And I thought to myself, I really should have taken the summer off. That's the sort of action you get in the summer. People go on vacation, right? Last week, Kevin was on vacation, so I'm catching some fish. I think he was at Disneyland with his son. So a lot of people are out. And that just leads to a very low volume, meandering market. So I would say short term, a little bit of caution is warranted.
It says we got 10 people in here and only 3 people have said hi in the chat so far. Who's in here? Say hello. I want to know.
Wrong with just, stepping out and just, giving the market some space. I will say, too, that, despite the pop in the VIX today, premiums are pretty low right now. So if you're thinking that you want to take some insurance on the market or some of your positions, now wouldn't be the worst time to get
almost
some
back
of
under
that
100. Obviously, Kevin didn't spend enough at Disney because we're back close to 100 here. Might break below it. But Brian, what's I think weird about this time in the volume is it's starting like mid-May. I don't know if summer, like there was a notice that went around that summer starting a month early or something this year, but is this a little bit weird, the timing of it?
Well, look, with all deference to my buddy Jeff, the Almanac trader, I'm not a huge proponent of seasonality. It is a factor, but to me, it's like if I saw the technicals leaning a certain way and some other things were leaning a certain way, and then that lined up with seasonality, I'd give it a little bit of weight. So what I'm saying is basically anecdotal.
What's up, Grant?
I do
appreciate you joining in here.
I do seem to remember looking back in my career and
Grant, where'd you find me from?
YouTube
or Instagram or Twitter?
So, and whether those summer months, start technically at summer, whether they start in May based upon the old adage, who knows, right? Who knows? But there definitely is more of a drifting, ambling malaise type of feel to the market.
Jennings down.
Before Labor Day.
Some fair points. Appreciate you as always, Brian. Let's keep going and get everyone involved here at the start. I think we just got Shy and Brett left, so let's throw it over to Mr. Brett first hear what you're watching on the day today, how you're feeling about the market, some thoughts into the general conversation we've had so far today, and just what you're watching. Appreciate you joining in as always.
Yeah, well, always happy to jump in. No, I think Brian and Jay in this
they
last
signed the
couple
deal
of
with
minutes of
Verizon this
discussion
morning, right?
kind of hit the nail on the head, especially with
Ooh, that
as
is
it
a
pertains
move.
to the volume we've had for the
We'll
last couple
throw
weeks
it on the
and
talk
some
about
of the price action. We came into that Nvidia report really kind of riding high on the CPI print earlier in the month, but since we got that move higher, the S&P hasn't closed up or down 1%. I mean, we've literally been chopping sideways. And so Friday's PC report, I'm interested to see the GDP revision, but I don't think that'll be market moving like PC is. And outside of Nvidia, on Thursday, we really have not had that good of price action.
This fan needed.
Nvidia has been doing stunningly well, but which is really interesting because the typical or the potential for the sort of sell the news reaction.
Ooh, Shadow. I don't know if I've seen you. Welcome.
Except for the company.
Appreciate you joining.
So,
we're listening to the spaces right now.
An interesting reaction, but when you look, zoom in on the sector by sector basis, you see kind of just weakness around a lot of these names that were showing so much strength. I think it might have been Jay, one of the two, mentioned how much rotation you've been seeing, throughout the year, and that was sort of one definitely a big feather in the bull's cap was that we were seeing strong participation wasn't just mega cap tech, doing all the lifting. For once, it was energy, industrials, financials. It was pretty much every sector was doing really, really well, and now. So many sectors are
now we are listening to
really
Brett.
taking a turn for the worse, and
he
this
works
on a
at
short-term
eToro,
basis and more
investment and options
for
analyst.
active investors, surely. But that
welcome to everyone joining in. Grant Shadow.
Are a little bit concerning when you start to zoom in a bit and
you
look at
that's
the
your name.
the equal weighted S&P, the
we'll talk about
RSP.
CRM.
That never ended up making new highs. So. Pulled back. I think it was like 6.5%. We had a strong
so far
rally,
topics I got to talk about. Sam Altman. We'll talk about Apple, Salesforce, Costco earnings tomorrow, Nvidia and AMD moves. And I'll ask about ASTS really as well. So we got some good topics to touch on.
Semiconductor
15 people live.
Nvidia,
Salesforce earnings should be out right at the close. We'll be talking about those.
That's not to say everything looks terrible. There's still some good-looking charts out there, especially on an individual stock basis. But
HPQ.
Yeah, I think just a little bit taking the foot off the gas a bit, kind of waiting for things to firm up and reset. We're not really fully breaking down, but we're also not looking all that strong. So it's this weird limbo moment, and hopefully Friday is enough to break us free a bit. At least that's my hope. Volatility has been incredibly low.
I'm looking forward to the Salesforce earnings. Salesforce should be interesting.
It was one of the days last week going into Nvidia's print had its lowest close since 2019. And bonds. I posted the chart earlier, and someone mentioned TLT, but that name was never able to break out. It had downtrend resistance, 200-day moving average, Q1 lows, and it couldn't reclaim that area. Now we see yields picking back up. They're back 10 years back above 4 or 5. So maybe that's another headwind for equities. And again, not the end of the world type of headwinds, but I think, this PC report's going to be a big deal for investors to get a better sense of where the Fed's going to be leaning in the second half of the year.
We got a couple of you joining in here. Say hi in the chat if you're new. If you're here for the first time or just doing anything, so we got 12 or 19. 4 people talking in the chat. What's up, guys?
The first step is to see a favorable inflation print.
How we doing?
But really, the Fed is they're going to need more than one positive print in their favor to start justifying rate cuts. So we're going to need to see a couple favorable cuts.
401.
And that really starts with Friday's numbers. So we'll see how that goes. I think that would be the most immediate mover, especially this week, short week, low volume.
Yeah, it should be interesting times. I'm watching that PCE on Friday as well. Let's just get shy into it here as well, and then we'll complete, and I'll come back with some questions. I actually have a couple talking points written down here for us to go into. But Mr. Shy, how are you doing today? What are you watching in the stock market? Any of your names report earnings today after the close? Is Okta a name that you watch a little bit? I know we have Salesforce, HPQ, UiPath, which has become a Kathy Wood name, C3 AI, which did have its moment in the sun, and FinTwit lure for a little bit. We'll say it like that. I don't know how much too much of a focus it gets now, but Okta, Salesforce, HBQ should be the ones that I'm really watching here. Any of these earnings after the close of interest for you, and how you feeling about the market today, sir?
Yeah, so don't own any of those names, but CRM is a good not indicator, but interesting software name. Obviously, the one, the king of the software space, enterprise space. So
Any interesting
that's
news?
going to be definitely one of my watches.
Should be easier
Watching
for you to see
IGV,
now.
the ETF, see how it reacts to it. But other than that, I mean, I bought some hedges for RK. When was it? On May 23rd, when it broke the 200-day. That's usually the case whenever I do any kind of index puts as hedges for my portfolios. Whenever it breaks the 200-day, I'm always usually covered on the downside, just because never again 2021. So I'm holding some hedges for that for the end of the year, tracking it. But for SPY specifically, I don't see Jay on here anymore, but like that candle is pretty wicked from May 23rd. But I'm not worried at all. I mean, there's again no volume today. Today's actually a green daily candle. Like that just shows what paper was saying. We're gonna be ending up in a good spot for a potential gap up tomorrow. Who knows? But like it wasn't as bearish as what the price action at the end of the day seems. So perfect example, like for SPY, like the only way I would potentially dip into some kind of hedges or protection is if it breaks the 50-day SMA. It's nowhere close to that. So until volume comes back and we see a couple follow-through days, today's a nothing burger in my opinion. I'm primarily just tracking versus RK, where you can clearly see it's kind of breaking down
330
to the downside, and it looks pretty ugly. And again, I'm air quoting growth ETF, but essentially when it's filled with Teladocs, Roku's, and even Unity, which I own, it's just not a growth company anymore. Like it's not really a great.
She sold a lot of Unity yesterday.
Yeah, she is just.
That's a buy.
On one.
That's a buy signal. That's all I know.
It's funny. I 50% increase yesterday when I bought it when she sold, so maybe that helps.
Oh God.
It's a shit show, but I mean, besides that, business as usual. MongoDB is the one that I'm probably gonna connect with paper later today on even more. Just, I think this one has so much room for the downside. Like just looking at their multiple. Like I know that EV sales or price of sales, Snowflake's higher, but if you factor in the revenue growth, free cash flow margins, and EV to gross profit, like it is 40% cheaper than MongoDB if you factor all those things in. So because of that, unless they buck the trend in the enterprise software space in this cycle where they guide up significantly, this will probably break down, in my opinion. And it's a top 10 position for me. I want to add more, but I want to add more in the low 200s, not anything above 300, especially with the current estimates in place. And they didn't really have that great of an earnings last print, so this would be back-to-back is what I'm underwriting of, like,
a lot of sales of Unity.
That may be some noise.
Doubling down on UI
And I've also been very public about, like,
AMD a little.
entering this year, I had two hedges for my growth portfolio, specific names, was Cloudflare and MongoDB. Cloudflare played out pretty well. Did in above 100. Now I sold it off in the 70s. MongoDB is one that, even though it's down 20% for the year, I do think there's more room. So I am still holding it, but I might do some short dated cash out my September hedges and do some short dated puts on this upcoming earnings, just because I do think this is like the last one it needs to kind of go back to a normal valuation. By normal, I mean like what Snowflake's at right now, which is essentially a normal valuation among the enterprise software space, where Snowflake was always head and shoulders above everyone else. Now they're kind of in line. So I think MongoDB is going to kind of have that as well.
Unity software, I believe.
One other name I want to call out is Global E, ticker GLBE.
Wait, Shai, actually, where you continue? What was that last ticker? Sorry?
MongoDB, ticker MDB.
Perfect, thank you. There you go, MDB.
Another one is Global E, ticker GLBE. This has had back-to-back significant strength in the market. Like
this one,
it's just been 2 to 3%.
No, maybe it wasn't.
Not pulling back at all. When at the open, it was pretty red across the board. Like this is showing some strength. I've been calling out that.
But yeah, I appreciate you, Blue Sky.
This does not belong.
Thank you for being here.
They had a really interesting, great.
Help them with a 4K watch hour goal.
Ago in their earnings cycle, and I do think the luxury goods or consumer recession is
the worst is repriced in Europe. So I think this is an interesting turnaround. And if you guys don't know them, it's essentially solve the complexity chain of cross-border commerce. Look into it more. I've been talking about it a lot, but again, Rule 40 score 50 plus for the next 3 years. It's cheap in my opinion. Besides that, Unity, I didn't add today. It's just an absolute dumpster fire stock. I can't believe it's just like non-stop selling. Obviously, Kathy capitulated. Usually, we were joking about that, but that usually is like a weird thing of like that could be the bottom is in. I don't know. It's just the way it plays out. Sometimes that's just how it is. But this is a name that's not going to have a turnaround for 2 to 3 years. I'm not expecting a near-term turnaround. I think there's a high floor in this company because it's a juicy acquisition because their product's superior, just poorly mismanaged. But their churn, the way their customer churn works, it's not as immediate as like what you would seem. Like they have to, like these customers kind of have to create a brand new game in order for them to kind of leave the platform. And that does take some time, obviously. It took a couple of years. So that churn that really I haven't noticed, and I called out, like, we haven't seen it really. It could just be super delayed. Either way, I added a ton yesterday, and I'm probably done until if it goes to the low teens, but I'm not looking to add that name really. I'm
buying 100 shares for you just to see what happens. Right now.
I mean, we'll see. We'll see if Meta even
on the Kathy Wood sale. That's my buy signal.
Yeah, I mean, I'll pass back to you soon. We have like 15 minutes. But and one other thing, Jumia, ticker JMIA, that's been looking strong, and it looks like it's accumulating volume. Like it's showing all strength today. It was like one of the first small caps to really go green and went green hard. So this is a name I've been saying. Like, I wouldn't be shocked to see this like hit $20 next year. Like it's got a massive runway, and I won't get into details. I've been being a dead horse with this name for quite some time, but just want to call out some strength in a sea of red today. Not as much as you would think in software space, actually. Software, we were on the space earlier today. Like the software names kind of were the first ones to catch a bid at the open. Like you saw CrowdStrike, Zscaler immediately go like up 2%. You saw even Snowflake show some strength, pulled back. But you're noticing like the Mercado Libre was green immediately, and now it's like leveling off. Global E was great. Atlassian's up 1%. Cloudflare's up 2%. Like growth software is caught somewhat of a bid today, outperforming. Could it be ahead of the Salesforce earnings tomorrow? This afternoon, maybe. Could it be because MongoDB and a bunch of other software names are reporting tomorrow? Sure, maybe, but it's an interesting note. But besides that, today ended up being a lot better than I thought it would be, and the trend is going to continue until it clearly breaks, but
15 minutes to
has
Salesforce.
not broken at all, in my opinion, even with the 10-year at 4.6.
Short to VIX, I wanted to bring you back into the conversation here if you have any thoughts about what we've been talking about here. And then we are getting up to these earnings coming up in about 10, 15 minutes or so. Salesforce, HPQ, Okta, UiPath, even C3AI, Capri, CPRI, etc. There are a couple interesting earnings. I don't know if any of them are on your radar, but just generally what you're watching and thoughts on the conversation we've had here. I know it's been a while since we've heard from you.
Wait, I have a question for sure.
Yeah, thanks. So Salesforce is probably the only one that this afternoon that I would be interested in for a trade. They were pricing in about 6.5%.
I own a little bit of Salesforce, but I'm not going to buy before earnings.
The calls were looking at certain levels out of the money.
I'm excited for CRM though.
10% range.
Ooh, shout out to whoever just liked the spaces. Like the live stream. Went from 3 to 4.
Just kind of out of the ordinary than what you would typically see headed into earnings. Now, I haven't taken a look at it again. I didn't really want to gamble on it, but it could have had something to do with the parity between it. I just didn't have enough time to go look at it today. But that would have been the one. I think it'll be very interesting to see. I know we saw Abercrombie and Fitch this morning blowing it out of the water.
What's up, brother? Paul, appreciate you being here. Welcome.
Tomorrow morning, Foot Locker, Kohl's, Dollar General, a couple of others that you could rope in. to that category as well. And then just overall with this market, to me, this is just a time to be cautious. I was having some conversations earlier that I don't really think I'm going to do a whole lot going into the end of the month. I think it's just a time to wait, see where the data is going to come. If I had to pick the next direction, I'd probably lean a little bit more on the bearish side for a little bit of a pullback before we could maybe continue up and test some of those highs. But I do think that we're setting ourselves up for a little bit of a move down. Just kind of everything that we're seeing with the data and mainly going into PCE. Like we're coming into the year pricing in like 6-7 rate cuts. We moved those back down. We kind of came back, found this little area of normalcy. Even though it's not necessarily normal that we would see, all right, all of these rate cut projections with where the market is. But, I mean, again, you just have to go off of what the overall market's expecting, not necessarily what the reality of the situation might be most of the time, especially if you are looking to trade a little bit more short term. So, I mean, I'm just going to be very, very kind of paying attention to that data just to make sure and get a better idea of, all right, where does this market want to go next? Is it going to be actually a time that we need to settle in and say, all right, it's not really worth pushing the gas to the floor right now on some of these trades, maybe take a little bit less risk. From a longer term perspective, though, with the market where it is now and kind of where it's been over the last couple of months here, this has really been the first time that I've started selling a couple of some of my longer term holdings. I know one of them was probably not the best idea, seeing as what happened to on earnings today, but I was a buyer of Dick's during the, not the absolute low, obviously, of the pandemic, but was buying it back then. Sold half of that position, I think it was around 190 something, so got some cash there, got some cash off of the AMD sales, mainly to just look at the market and say, if we do have a scenario where we do have some more of these pullbacks, there are going to be some names that I like that could end up moving down and being a little bit weaker than the rest. One of those, I really want to buy Palantir sub 20. My average is probably in the 15, 16 area right now, and that's been one that I've been looking for a while to try to get that one a little bit lower. I like that company for the long term, but again, just having that cash available in the event that we do start to sell off, while also having that upside exposure as well, because I'm not selling like the entirety of these positions.
I would love Palantir in the 1850, 19
range.
He
stopped talking.
I think a lot of people are waiting for Palantir to break 20. We'll see if we get there.
It feels like every couple of weeks you see it maybe get that attempt below 20, and then it just can't do it. It's almost like that that 1450 to 15 area. I mean, I was selling some cash secured puts, and there was this one week where it dropped below 1450. I was all excited that I was going to get.
Love your updates on X. Thank you for your first time listening and watching. And then all of a sudden, on the Friday, Stan. I actually bought some SCHD recently. Oh, so Mikey B. We'll shout out, Mikey. I really appreciate you. I'd love to see you here on the chat.
What a tease.
You were the first person in the live stream this morning. Shout out. Yeah, speaking of Kathy Wood from earlier, I know she's been adding to Palantir a little bit too, actually, recently. It's I think it's top 10 holding now in RK, maybe top 15 or something like that, but it's getting up there. We do have about 7 minutes to the close, by the way, so I may cut us off after this conversation, but short the VIX, you were muted there?
Yeah, I was just going to make a joke. That makes me a little nervous. Kathy loves to buy high, sell low.
Stan, do you listen to the Spaces a lot, or is this the first time listening to any of the type content? Ooh, awesome. Paper gains. I heard you maybe asking Shy a question there as I was thrown over to short the VIX.
I was going to ask short the VIX if he was shorting the VIX today, but he answered the question. So he was not shorting the VIX today. That's what I heard.
We do have these Salesforce earnings coming out any minute now. Anyone have, before I pick someone at random, anyone have any thoughts on it before I throw it to someone?
Supposed to be a 6% move, I'm pretty sure, so decent move. I don't know, CRM is a space that I'm like highly on putting it, not a penalty box, but like this could be a massive disruption. AI can really disrupt this specific niche of the enterprise space. Like CRM
Mikey
is definitely
B
on high
in the house. Let's
radar
go.
For me of like, oof.
That makes me hype.
That's why I'm not as bullish as Monday.com, Klaviyo. Salesforce is an absolute beast. I'm not going to say it's going to go away. but it's definitely on I'm putting a yellow flag next to it, so I'm curious to see if we see any.
You guys are in
of,
here for the first time. Make sure you
adjustments in
subscribe to the channel, by
behavior.
the way.
I'm probably not going to see it this print today, but
Earnings
going
out in
forward,
5
I wouldn't be
minutes.
surprised if we
No,
see some
about
kind of
5-6
behavioral
minutes.
change. But I know Paper is a much bigger expert in the space than I am, so curious what his thoughts are.
They had. I didn't actually finish my analytics. It was
Oh.
like $3 overpriced.
Stan, you missed. These spaces are great.
Bucks, implied move 18, sitting at 270. So I mean, I
Ooh.
think just under.
I don't know about that one, Mikey. I can't get behind that.
250 is
JT.
probably where they're gonna land.
I mean, good day.
But honestly, I don't think this is gonna be the breakout quarter. Quite frankly, I kind of feel like it's gonna be a neutral quarter. They've been warning though about this AI spend for like the last year. Anyways, and I feel like most of this pullback has been due to that Informatica.
We have a decent little crew in here.
14,
like 14 people live. Not bad.
Like all of this drawdown has been based on them saying they want to buy.
And we've gained 2 subscribers during the live stream as well. Goal is to get 10 subscribers. Come on. If you're in here, not subscribed to the channel, what are you doing?
My gut is they'll pull back down to where they are
right
now. So
5 minutes. 5 minutes.
Like a beat and skeet is what I'm expecting.
Salesforce, here's what we're expecting.
Honestly, that's what
Maybe zoom in one more.
Assuming right now.
HPQ.
So I hope that it's a nothing burger quarter is what I hope for.
Okta.
But yeah,
Okta's looks pretty good.
And then it turns us to that MongoDB. So hopefully it gives the rest of the cohorts a little bit of a pop tomorrow.
Chat.
And they don't.
What's up, Brokit? Welcome.
I guess the risk is to the downside, if that makes sense.
Chat.
Which would put them around 250 to the downside, right around that 200-day simple moving average on CRM. That would be
looks like we're going to close on the lows on everything except for maybe the Qs. So funny how the market took a quick turn from the beginning of this call.
Pain. Brian, any of these earnings after the close in interesting places? Maybe some setups that you could be watching after they report. Salesforce, HPQ, Okta, maybe some of the main ones. Any interesting spots from a technical level? No. There you go.
I don't play earnings because it's a crapshoot. It's a binary event. The exception would be like if I have a long term, something that I'm holding until I retire.
What about kind of the day after earnings, though? You ever play those setups?
So
that's a great point. In fact, so I have a big archive of like maybe over 100 different videos that show different, techniques, different entries, different setups. One of the most popular.
We gained one more subscriber when I said that. Shout out.
The day after, and here's why.
Because
now the news is out. Right, you don't have to guess, and based upon how a stock reacts to the news, you can get a lot of insight as to what may happen. So, for example, if you get one of my favorite setups is a stock that gaps down hard after earnings and just basically goes all the way back up. Take a look at Kava today, right? I mean, the action in Kava today is
Kava food is great.
Insane.
If you guys haven't tried it,
it had this
eat the
big
food.
gap
Give it a
down
try. A little expensive, but it's very good.
And it is just powered all the way back up.
Chat.
That's telling you there's a lot
2
of
minutes till
strength in the
market close. 2 minutes.
Stock. And it's also telling you that no matter whether the earnings announcement seemed good on the surface or seemed bad on the market or on the surface, the market thinks it's good.
Interesting.
Right? So, yeah, I love watching action after earnings, and I think it's actually a better way to play stocks instead of trying to guess a coin flip before the news comes out.
Yep, some very fair points. I have not seen too many sustainable trading strategies actually betting into earnings. There's some good ones for the IV build-up running into it. There's some interesting ones for day after. I have seen some different kind of volatility plays when the past move and the implied volatility don't necessarily match up. But those don't tend to be the kind of every single day, every single earnings plays ones.
I would say that, I mean, there's some other creative ways to do it based upon your time frame. So this is where you're going to arbitrage short-term versus long-term. So again, let's say that you have a long-term thesis
HP
on a
dumping
stock.
into this close.
Maybe you're accumulating it. You're willing to accumulate at lower prices over time. And you go into earnings with a high premium.
For Salesforce, Wall Street's expecting EPS $2.37, revenue $9.15 billion. I'll read out the numbers the second I see them.
Because you don't care, right? If the stock goes down, you're going to acquire it lower because that's your long-term thesis, and
not
you'll
looking at the
get
chat for a
somewhat of
minute
a
or two
discount because of the premium you sold. So, often doing that arbitrage between a long-term outlook and a short-term
Market's
play
closed.
Can be good, but you got to be consistent and you got to know why you're in the trade.
All right, we do got the market close here. We should be getting these Salesforce earnings pretty early into it, so I don't want to just throw it over to someone and then interrupt.
Evan, did you say you didn't have anyone that had a system?
Had a system? What do you mean? Oh no, for betting around earnings. I mean, like I said, the volatility one. It could be
We do have a hardened system. I didn't run the numbers on it. But yeah, it's all time spreads, calendars.
Interesting.
But yeah, it's hardened system for sure. But so like if I ran it right now, the CRM model would be about $140 net outlay, selling $270 put for Friday, buying May 31st, $270 put against, makes money up to $296, down to $248. And net profit would be about like $300 against a $140.
Ooh, we do have some of the earnings out here. Salesforce $9.13 billion, Wall Street wanted $9.15 billion, so small miss there. EPS. Their forward guidance was 9.2 to 9.25 billion as well. Let me quickly see how the stock's moving. Big wick down there. Was trading around 270. Now we're down at 253. Okta also had earnings out. Big wick up for Okta, but let me try and figure out these Salesforce numbers here. Salesforce, yeah, sales was a small miss. Come on, give me the EPS. I hate when they make it a little more complicated than it has to be.
That is a rough look on
like
CRM.
$1.56. Ooh, that would be a big miss. I'm gonna wait for a second there, but that's the initial on
it's
CRM.
244.
244.
Yeah, 244 beat 237.
There you go. 2.44 for Salesforce, ticker CRM. The revenue was a miss. The EP, very small miss if we're being real. And then Salesforce's EPS was a small beat.
Okta just had a massive reversal, 10% down.
Oh, really? Damn.
Reverse from the top, yeah.
All right, let's get those Salesforce numbers out. Okta, let's see if I can get that in front of me. Just quickly at the stock moves. Yeah, dude, that's a massive wick. It got up to like what? 103, 102, and now we're down at 89. That is quite the fat move. Waiting for some of the forward guidance in front of me too, so give it a second. But some interesting moves on these earnings right here. Me being on this account also makes it a little bit more difficult. That revenue guide for next quarter for Salesforce, 9.2 to 9.25 billion. Wall Street wanted 9.35 billion, so below expectations for Salesforce. That is, I kind of think what's moving us lower here. Shai, any interesting initial thoughts here as you're starting to dig in? I know with earnings it can be difficult, like the second they come out, and I'm very aware of that. I struggle a lot, but yeah, it looks like for forward guidance for Salesforce was a little bit weak, and that's what's moving us lower here.
Both names are making it difficult. They're making the report pretty difficult to dig through, so I'll get back in a couple for sure. Trying to read through them.
Quarter, it expects revenue. Let me get this tweet out. Revenue between... fuck it. Let's see. Anything else happen here? Okta with a big move. I'm still waiting on UiPath and HPQ, although HPQ has had some downwards candles. For EPS, they expect between, for Salesforce, 234 to 236. Wall Street wanted 240. So it looks like the forward guidance for Salesforce on both top and bottom line are below expectations. Paper gains. Any initial thoughts on the moves we're seeing here? Any other stocks being impacted?
Well, IGV looks like it's down a little bit. Who else do we have? Dollar Gen, Pure Storage to 10x. I think we had. Hang on.
Okta came out, which is an interesting one. They had EPS of 65 cents, beating expectations of 55. Revenue of 617 million, beating expectations of 605 million. So I guess there's something in the forward guidance, which is why it's going to be down.
They're kind of reversing here.
All right, we got that Salesforce out. Should be an interesting one. Any other news here in after hours?
Dude, the one that's like constantly blows my mind is Pure. Pure is like Pure Storage, but PSTG. They, I've worked a lot with them, but like these guys have just been rocking 52-week high list like constantly. They're hardware provider, like solid state storage, but looks like they're down a little bit. Kind of. We'll see what happens to them. Looks like they're coming down a little bit more.
Salesforce getting whacked here, down 10% in after hours on the news.
Yeah, that's a bit more than implied.
Yeah, that's so the options sellers are actually losing some money this time. Doesn't happen often, at least what I've been seeing recently. Although I have noticed when you miss, you're getting beat down pretty hard this earnings season. A couple other stuff.
Back to green.
Yeah, Okta. Look at this move. A little all over the place. A lot all over the place, shall I say, actually.
Par for the course.
Par for the course.
Wasn't that the case with Kava? Like down, like handedly in the post market, and then green the next day.
Yeah, it actually didn't close that pre-market session down. It had a very low wick and then kind of fought back a little bit in pre-market. Like it started earnings looks like it was around 84, and then it fell down to 75 after, and it closed after hours around 80. So it bought back some of it, but we'll see if it can do that. Not like Okta's doing here, though. Not like Okta's doing here. But like I said, we're actually on Okta close back to the high it got up to.
Yeah.
Salesforce ugly though. Ugly.
What else do we have? Is American Eagle gonna be like Abercrombie? The thing like it's hot.
Sorry, it had to be done. C3 AI earnings are out. I don't really watch this one. I know got popular a little bit. I don't have it up here. Let's see. C3 AI initial move. Ooh, nice little wick up there. Was around 24 after the numbers came out. We're at around 26.50 right now. Interesting. Let's keep it going here. Keep it on this talk, and then we'll start to shift the conversation over as some of the earnings start to slow down. Okta expects revenue next quarter between 631 to 633 million. Wall Street won at 615 million. Adjusted EPS between 60 to 61 cents. Wall Street won at 54 cents. So decent forward guidance as well for Okta. This is a weird move. This is, I guess they're just kind of like wanted to send it lower, so they just sold it and looked at the numbers after or something. And CRM getting some continuation to the downside. It had the second 5-minute candle that was green, but it is no longer. It fell back. Still waiting on these UiPath and HPQ earnings.
Ooh, you gotta throw your 1 minute on.
For what?
Candles.
1 minute candles initiated. Yeah, ooh, that's ugly. They had one small attempt there. That's it. Yeah, Shy coming back up. Stock Talk, I'm going to throw it over to you soon. I know you're a little bit under the weather, so send me a thumbs down if I shouldn't do that. But keeping an eye on some of these earnings that we have coming out, sitting and waiting.
You can throw it to me, but...
Oh, yeah. There it is.
It's the meme. I got bronchitis. Oh, my God. Wow. Mute. Get out of here. This guy just said...
One red day stick in Stock Talk. He can't handle it. Shut him down.
I can't tell if that was like for show, like be like, yeah, he's actually sick.
That was actually like literally every time I try to talk, I cough.
Dude, 234 on CRM. That just feels aggressive. What is that? You're saying it wasn't that bad?
No, CRM was below expectations.
It was a slight miss. I just added it to 234, actually, for bounce. It was nothing big.
I bought
also held up their
their full year was held up too, so it's just a near-term weakness that they're projecting. Like it's not a 15% down move.
Down
That's
13%.
aggressive.
Well, paper was saying coming into this, there was some concerns around these type of companies and how they'd be able to hold up in a AI world, we'll say. But 14% is a big move. I actually own a little bit. My cost base is $192.50.
You might get it.
I might get it back there. I bought in like 2020 and 2022, 2021 and 2022. Maybe I add a little bit more soon. We'll see.
I don't know. I'm kind of that's appetizing.
Salesforce is a name I could get behind. I've used it before through different jobs and stuff, and it was one of the more work. Like it helped me.
What's the multiple now?
AI, that's the thing.
What's the multiple now at 235?
I don't think I'll have that.
Let me pull it up to my model.
We could also just do EPS. What they just report? 244. Stocks at $234. This is not going to be a good multiple. 2.444 times
no, it's
4.
It's actually not. It's not that bad right now. Actually, they're multiple. Like 10% growth for the year. They still have 30% plus margins.
24.
I just want to know, did it get cheaper or more expensive?
No, it got cheaper, much cheaper. It was a baby haircut on the miss. Like it was not. I want to say it's a couple percentage points.
It's the forward guidance though that was a little bit below expectations. I can get that back in front of me. And nothing crazy, but like we were talking about, if you're a little worried coming into it, and then you show some weakness, it's gonna be what happens. They expect their fiscal year EPS to be between 986 to 994, which is above expectations. Revenue 37.7 billion to 38 billion. Wall Street wanted 37.98 billion. UiPath announced a CEO resigning. Founder Daniel.
That's awful news for Path. Actually, holy shit.
Their founder Daniel Dines will be reappointed as CEO.
Oh man, drilling.
But EPS guidance for Salesforce on the full year was above expectations. Revenue was below, and then on the next quarter, both revenue and EPS were below expectations.
Did Benioff resign?
Is he even part of UiPath?
No.
Salesforce. CRM. No, that's why I was like, no, nothing about that. Benioff is still there. What's this UiPath move? UiPath. Was at 14? Is that was at 18? Is now at 14?
No, that CEO is a big deal for them. So this is a big. It's a big
down 25%.
Yeah, it deserves it a bit. I'm trying to think through their numbers though. It's like kind of difficult. Fuck.
Just let me know when Kathy sells. Oh God. It's so bad. I gotta feel bad for Kathy.
Nah, she's taking in her management fees. She's good.
I mean, you gotta give it to her. Though she sticks to her.
I genuinely think Kathy Wood is good at picking names that are going to be successful in the future. I just think that she trades around, she does different stuff that ends up hurting it a little bit. But I actually think they're pretty good at finding opportunities. And I think that if you took their research and made it into your own thing, I don't think you'd be too far behind. I actually think you'd be ahead. And I do genuinely believe that. So we'll see. UiPath down. That's one that I think that's one of the few names that she owns in every single fund. And it's down 27% in after hours. 28%? Who's counting?
I do want to. I don't know about what do you think about this paper, but I do think their automation suite is something that can be disruptive with AI. It's not.
I'm not familiar with the company actually.
Oh, you're not? Oh, okay. So yeah, you lucked out then. You didn't get excited at all. But yeah, it's because Logical's not up here, but he asked me my opinion about this because I'm bullish on Palantir. Totally different businesses, but again, similar Snowflake and Palantir. People compare them all the time. It's different businesses, but RPO, their automation could be disruptive to AI. But having their founder come back on the CEO. I do think it's pretty bullish, but 31% move is fucking wild. Holy shit.
It's a smaller market cap, though, right? It's what happens.
Yeah, it's
10 billion.
Well, now it's probably a small cap, small mid.
It had its days in the large cap area.
Coming in on 14% for Salesforce. That's a record, I think.
I got asked in my chat, should I sell Salesforce? Oof.
No.
I was actually considering buying a little bit more here. We'll see. Do I pull the trigger? That's the question mark.
Well, this is the biggest move in a couple of years that they've had.
All right, guys. We'll buy a token share. Show our support. Come on, Benioff.
214, I will buy. I don't know where this level's from. I have a level at 202 and 214. Why? What is that from? 200 week simple moving average is at 220. So 3-day rule. But that prior consolidation, am I muted?
Nope, I hear you.
Oh, there's a prior consolidation level from 2023 is heavily around that 214 area. So it'll probably come in there. Is that when you bought it?
No, I bought it a little bit lower actually.
So so the last breakout earnings was at 225. So that's likely where we're going. And it's going to stop right there. And then maybe undercut it to the 200-week simple moving average around 220. Just technically, because now we're into technicals since the fundamentals are done.
Technically.
You know what's so funny? The fake AI software company is up like 12%.
AI,
C3
yeah.
AI. That's just the irony of this earnings cycle where like enterprise software getting smacked across the board.
Did
AI
Mongo,
is the big.
Did Mongo move after hours just now?
They should. I'd be worried. I'm caution on MongoDB.
There you go,
Tomorrow's
Gavin.
gonna be
I think
probably a bad day for them.
Yeah, a little bit. I would probably start grabbing some of those. I might even take that
Ugly
as
move
a
for CRM.
trade. Those 300s.
Gavin just asked me in the chat if I'm still all in on CRM. There you go. No, but I actually did just buy a tiny token share. See if we can support it. Maybe I'll add more at some point.
This feels like a lot, but at the end of the day, it's really.
I'm a believer in the 3-day rule, honestly. So normally I wouldn't buy
yeah.
here if I was going to actually wanted to make a meaningful position as opposed to just a token one share. But we'll see.
It could hit this 215 in the pre-market. Tomorrow
Appreciate you helping me get the watch hours, Gerg.
Open at 2:30.
We're almost at 4K. 12.1 on this one.
Frankly.
Yeah, ooh, we'll see. There's been attempts to try and get some green candles here in after hours and CRM. And look, you got me on the 1-minute chart now, and it is not a pretty one.
Wait, yeah.
At least it's not as bad as UiPath.
Super thin trading. All of this is we don't trade this really, not actual trading. Side note: American Eagle was not an Abercrombie.
Interesting.
2.0.
Interesting. A lot of those names did good this morning. Didn't we have, what was it, Deckers that reported earnings or something also? Dicks, yeah.
Big dicks.
You big long on Dicks?
Dude, it was a big long.
Here you go.
It was a giant sippy. It's crazy.
Oh shit! I don't know if you guys called this out. UiPath missed their guide by 10%.
Oh really? That might not help it. HPQ
That's
is getting a little
sure
bump right there. I'm sure those earnings are out.
That was a big
HPQ.
ARR miss.
Look at this Pure Storage again with the highs. I can't. That is just a crazy. So
HPQ
Pure
beating
Storage.
top bottom.
Back to Micron. Is
Nice
a
move,
box
HP.
full of Micron chips. If you didn't know that, that's what Pure Storage is. Box full of Micron and Western Digital.
Rough times, Paul.
memory
Rough times.
Sticks. That's what Pure Storage.
I did
is.
just add a share
It's
of
crazy.
Salesforce. We'll see if I regret
I
that.
hate that their single-digit.
I like to
growth
wait
on
3
the top
days,
line
but
always scares me
sometimes fuck
away
it.
from Pure Storage this year. Like they're growing
Dude,
3% last year.
It doesn't make sense to me because
I don't know. Their margins aren't even that juicy.
So selling Pure Storage boxes in the enterprise, their thing that made them so great because it's
This is your first stream, guys. Make sure you're subscribed to the channel.
It's a big giant hard
Shout
drive
out.
for your data center, right?
Hit that bell button if you want to get notified whenever I go
And
live.
it's made out of, instead of hard drives, it's made out of memory chips. So
Got a couple more friends joining up.
Memory is
HP.
consumable.
Nice
if you
move.
didn't know that. because it doesn't last forever. Like, you can only use it so much
Forward
before
guidance,
it decays.
give or take in line.
And so they basically give you this lifetime guarantee
Yeah,
where
a little
they'll
above,
replace your memory as it gets consumed for free for life. And that's their thing. But yeah, what, like, crazy.
By the way, HPQ numbers came out. EPS 82 cents, beating expectations of 81 cents. Revenue 12.8 billion, beating expectations of 12.6 billion. Next quarter, they expect EPS between 78 to 92 cents. Wall Street wanted 95 cents. Midpoint is actually exactly what Wall Street said. So, someone just said HP was moving higher, saying it's reversing hard. No, it's still up, but it's moving back down a little bit. But HPQ higher in after hours.
Arcade's puking after hours, down 2%.
UiPath's a big position for him, so I'm not surprised. Yeah. Roku 52 lows as well. Yeah, this one's a little ugly. I've seen better. That's the 1 minute though.
So another software name for tomorrow that I think could be up for disruption, not enterprise, but like is a stupid valuation, is Samsara, ticker IoT.
Wait, that's a real company.
It's a real company. I'm saying the valuation is stupid high right now. Like,
I might say that one's justified.
Do you think it's that much of a moat right now at this stage? I know that they're in that transition. I guess you can call it an investment year for them, but no. I'll let you talk.
Are they massive?
I wish I could play music on here. Come on.
They're ginormous.
They're $20 billion worth right now. And they're growing, like, they have low single-digit margins with mid 20% growth, but they're trading at 800 times free cash flow.
It was so much fire there, you made him choke.
Well, that's a stupid amount, 800. Like, they're trading at 140 times next year's free cash flow. Like, it's the value. For sure, real company. I love their niche and their mode within their niche, like in 2 or 3 years, but this is not belong in the 30s.
But it's not software.
That's the thing. That's a tricky thing. It's not software. So like that is like the nuance.
Look at Pure Storage. It's not software. Palo Alto is not software. Zscaler, software. I think there's a theme here.
You might be on something actually.
Pure Storage with a decent move.
Yeah, it's wild. MongoDB.
That's one of the best performers this year. Pure Storage.
It's wild.
Monster.
Snowflake software. We got a couple more friends joining us up here. Logical. Let's go over to you first. How you feeling today? We're looking at some of these earnings. Salesforce down pretty hard.
I want to know how much IWM Logical bought today.
How much IWM did you buy today?
None, but I did buy another small cap. I started a new. No, here's the thing, man. Okay, look, I'm sure stock markets are. No, definitely.
Chad,
not.
I'll be back in a minute.
Sorry, Shy, I love you, man.
Kathy sold it.
No. Here's the thing. Okay. So, I think that there is a ton of value in the small cap land. So I did start a new position. I'm not really ready to talk about it because I just posted it to our members right now. So it's a starter, and I'm hoping to build that out. And I'm willing to take lower prices on it. But yeah, I've been adding constantly, and I'm sure Stock Talk has. I'm not sure. I know he wasn't feeling well, but if he has spoken today, I'm sure he's mentioned how the 10-year yield continues to be strong, and that continues to put pressure on equities. Man, that guy's words of wisdom is just ringing in my ear every day now, and I'm understanding that a lot more, and I'm seeing it. So here's what I will say. The small cap index, IWM, is obviously very rate sensitive because most of the companies are unprofitable or highly levered, and so it's a very rate sensitive sector. It's lower rates mean very good things, right? So here's the thing. I came into this year, just like many other investors, believing that there will be rate cuts, and I still do believe that rate cuts will come. Clearly not at the level that we were expecting originally. That said, in my portfolio,
Salesforce is down 18%. Sorry, I had to call that. It's puking.
No worries. So here's the thing, right? I own a bunch of small caps, and let me tell you, they're doing incredible this year. So I own very clean balance sheets, not over levered at all. Like most of them don't even have debt. They're profitable companies, typically founder led. like, obviously TMDX, big winner this year. Pubmatic, big winner this year. Despegar.com, big winner this year. So, I think that there's a ton of opportunity because the relative valuations between small caps and large caps is largest in history. It's just easier to bet on the winners in the small cap land. And I believe that once the rate cuts come, that will shift investor sentiment to be even more positive towards small caps. So I don't have to sit through the chop of the IWM, which is clearly just trading like inversely correlated to the 10-year yield. Instead, I can look for businesses that are continuing to outperform and watch their stocks appreciate, even though small caps in general aren't seeing that. Now, if small caps get going, I expect that the big picks that I'm making will end up becoming more, higher valuations. Because right now, I still think that they're extremely, if anything, maybe even below fair valuation. So, I'm doing a few things. I've been dipping a lot more into margin, honestly, because there's too many deals on this market.
Ooh.
So
I don't know how I feel about that,
I
chat.
don't have the cash on hand. I'm just seeing, very high quality names sitting at, 30% drawdowns, and I continue to add to those, or, maybe they're not in drawdowns, but they are extremely fair valuations. So there's just a ton of opportunity in this market. I love to see that it is a stock picker's market. I think I've been waiting for this for several years now. You can't just buy an index and chill. So for me, I welcome that. I love that. It's proving very well in my performance this year. And the thing is, like, I've had a pretty good year this year, but the more I think about the names in my portfolio, the more I feel like there is still a ton of upside in the names that I'm in. And so, I've been trying to reduce a lot of the volatility of my portfolio. So I know that's funny because I just said I've been dipping more into margin. But what I have been doing is actually lowering leverage in my portfolio in other ways. For instance, I'm no longer, in these 3x leveraged ETFs, especially, LABU and TNA, because, again, they're a very rate sensitive trade. And so it's just not fun dealing with volatility, choppiness in a 3x leverage product. I've, exited a lot of shorter term options plays and things like that. I'm just sitting in shares. And for the most part, obviously I have some leaps for a couple names, but that's being very selective. So yeah, I feel really good. I feel very well positioned. Let the indices chop. I don't really care. Again, indexes were down bad in April. And what did we see? We saw TMDX have a record month. We saw Coupang have a record month. So, I think that you can find strength in this market, and that's what you got to look for as an individual investor. Again, if you're not that kind of person that's willing to put in the hours and days and weeks and months of research, the index I still think will do just fine. SPY will do just fine. But again, right? Like there's cash yielding 5%. So people might say, why would I take on this risk?
It scares me a little
when
bit.
I could just sit in T-bills. And yeah, I get that perspective as well. But, for us that love the stock pick, I think there's immense opportunity in this market. I don't know if I'm willing to go dumpster diving into Lululemon yet, but even that is starting to catch my eye. And, I don't think we're necessarily near bottom here. I think that there's potentially another leg down. And given fashion is a tough industry, I'd like to wait for a very no-brainer opportunity to go long something like that. I have Ulta reporting tomorrow. That's a recent name that I've picked up. I've sold some credit put spreads and bought some shares. And, so we'll see how that goes. But beauty names have been doing very well. Stock is very cheap. And they have a big buyback in place. So
pretty ugly for you.
I don't know. I just expect that they continue to do well, and it's its cheapest valuation in its history. So that'll be an interesting one tomorrow.
CRM also.
I know that you guys talked about Path a bit. I've been tweeting about that for a couple weeks. I really like that stock from a valuation perspective, but I got a ton of pushback, which is why I love Twitter, about how Copilot might affect them and how it could disrupt them, and certain big consulting firms are no longer relying on Path as much as they were maybe a year or two ago. And so, that made me a little bit hesitant. I'm like, wow, this valuation's really good considering the annual recurring revenue. But I can't square some of the details about this business model, which, tends to affect terminal value down the line, and valuations and exit multiples and stuff like that. So I said, let me just wait for this earnings call, and I am glad I sat out. Now, if this was up 30%, I'd probably feel stupid. But I'd probably buy after that, right? Because it would feel de-risked. So that's something I did with LiveRamp. It went up, after earnings. I bought it. It faded that entire move. I bought more because as long as I feel that the earnings call is good, I'm willing to start buying, and that gives me a bit of another data point to relieve any anxiety. Like I had some issues with, is Google going to deprecate cookies? Is that going to affect, LiveRamp's revenue? Turns out, they're totally fine regardless of when that happens. And so, that's when I start building up positions, when I get more data points around the business and feel comfortable. Anyways, I've been talking a lot. I'll just pause it back.
Yeah, I forgot how big of a component CRM was to the DAO. But good
Grades,
God,
that's up to you. I actually did. I did buy a tiny bit in after hours. Here, what did I get?
Yeah, I was never a fan of CRM. I don't think I've ever made that opinion public, just because
I should have waited.
Such a random ticker, but it's just, I don't know. I always felt like it was a commoditized product, more or less, and you could argue with me on that. But like Slack, for instance, I mean, we all have Microsoft Teams too, and then it never really made a lot of sense to me. There's customer resource manager software is good, obviously, but then
I like to wait for the three-day rule, though.
I mean, then you have like Datarama, you have Power BI.
Give it 2 or 3 days.
So many different competitors.
To digest. I'll probably be buying again around 210, 215.
I'd rather own Microsoft.
Pain. Sorry, Craig. Kevin also joining us up on the spaces here as well. Good afternoon, sir. How are you doing? You watching any of these earnings? Salesforce getting whacked pretty hard here, and I know a couple stuff also on your radar. Also, I mean, I know you pointed it out, Shai, or someone else. Sorry, but RK also getting hit.
Record shellacking, 17% now for Salesforce.
I mean, if we're at 17, you might as well get down to 20 and give me another screenshot if we're at that point. But Kevin, how we doing today? What are you watching?
I'm doing good, man. I'm watching this Salesforce move now. If you're looking at a daily chart, though, it's really close to that 200-day moving average. So I would suspect that we would have a technical bounce here. Maybe we see some follow-through flooding tomorrow, but I think we're only $4 away. So look, everybody has the AI trade, and we all understand that. And all they did was kind of talk about AI within their press release, right? But they have other businesses, and you are seeing a little bit of a elongation of the sales cycle, not like a complete just like degrading of the sales cycle, but just an elongation. And I think that deals are just getting chopped up a little bit more than what the street expected, which is why they had the lower guide, and they had the situation where they kind of missed on the top line. And I like the thing that I kind of like about this earnings season right now is like you're starting to see the shakeout of some of these players and how the market's starting to react. I mean, the market is literally telling you when we have these type of sell-offs kind of where we are at in the cycle, in my opinion, right? And that's not a negative thing, but I think there's more focus now on some of the fundamentals and the ability to continue to grow and also grow your forecast moving forward. And anytime you see any type of deceleration there or any type of commentary that says otherwise, your stock's getting sold off pretty heavily, right? And so we see a lot of this overvaluing being kind of taken out of the market, to say the least. Now, somebody brought up the component with the Dow, right? Like, it's price weighted, and I know I think Paper, you brought that up. Paper, I know you know this, but just for people that may not know, the Dow is price weighted, so the higher price stock in that index is going to have a bigger impact when it comes to the Dow just in general, which is one of the reasons why UNH is like a big problem for the stock, for the index, and I'm sure that people want to see that be
I don't want to hear. I
split.
see what 20% move would be.
Do like a 4-to-1 because of its impact that it can have, right? So that's kind of where I'm at. Honestly, man, like I might have came in at the wrong time, but it sounded like there was a little bit more bearish commentary today. You guys could tell me if there's something a little bit different, but I mean, we have 3 weeks of, for the most part, low volume. Okay, good. All right, I was just getting in, I was just like, dang, what's going on? You coming to the realization that... everybody's coming to the realization where we're at in the cycle a little bit. Let's say this, right? The volume wasn't, obviously, we talked about this paper, right? A couple of weeks ago, right? The volume's not great. The volume wasn't great. Price action was shit. And now we're kind of seeing some reasons to be selling in this market. I would just say for the bears, though, because bears have not even came into this market. They're scared right now, for sure, and rightfully so. They gotten their faces ripped off every single time that we have a sell-off. One thing to note, though, I do believe that PCE will be a bright spot for this market on Friday. I think that the market is overestimating what PCE will come in on a month-over-month basis, and I think we're actually going to have a fairly low print, 0.21 is what I'm modeling out. And if that is going to be the case, I would suspect that we would have a similar type of rally like we did on CPI. And mind you, I'm not like an uber bull in this market by any stretch of the imagination. I think that the 20-day, 50-day cross that we had and our ability to reach new all-time highs was an anomaly, in my opinion, based on the last 25 years of data that's out there. And I think that we will see that 200-day moving average here. I'm not going to say like next week or anything of that nature, but I would not be surprised if we reach the 200-day moving average by the end of this year. And I think that would be a healthy test. And I think that we would see buyers actually stepping in to that market. The fact that we had NVIDIA earnings and we didn't get any other follow through outside of semis and tech and maybe a little bit of communication services is also a telltale sign. I was out last week, but I pulled the numbers up. The last 5 trading days, right, we've had this choppy action. There's only 2 sectors that have seen positive inflows on a net basis for the last 5 trading days, not including today, right? That tells you a whole lot with where the market's at right now. So a little bit of a rotation, a little bit of a churn, but I do believe that we will have a little bit of a bright spot for PCE on Friday. I don't think it's going to be the thing that changes the whole narrative, but I think it'll give at least bulls a little bit of an out to maybe sell into strength if we were to see a rally on a vol crush type Friday that we usually would see. So I'll kick it back over to you guys.
Paper, do you follow Nutanix, ticker NTNX?
Nutanix.
Well, 25%.
Yeah, I know Nutanix well, yeah. Yeah, Nutanix.
Dude, that's wild. They were a runner this year.
Yeah, Nutanix, by the way, is built on Supermicro. So it is a software stack on Supermicro hardware, but it is they call hyper-converged infrastructure. Well, it's a server. It's servers. But yeah, they're not.
Messed up.
It makes sense. But they're enterprise. They're not. They don't have AI play at all. So if that was built in, which I don't think it was, but that's not. It's just a different use case.
Yeah, paper. I think they aggressively, because I did a story on them today. I think they did a little bit of an aggressive guide last quarter. And I think that probably also added to this, right? Like that aggressive guide, that beat raise situation that you had, buyers continue to buy into the stock. You know, it's a very high bar for that stock going into this.
Yeah, it's a good company, but I don't want to, without getting too deep in the weeds. It's unified computing infrastructure, if that makes sense. But it's a server play centered around software. Components, like unifying all the hardware into one. It's basically turning on-premise hardware into your localized AWS cloud, giving you the ability to build your own cloud on-prem. Did that make sense? I hope that might have made sense.
To be fair, there was probably not much a way you could have explained it that I would have been like, oh yeah, that makes complete sense. I can go and do it tomorrow, you know?
I think that might have made sense, though.
Yeah, no, I think so.
It's the cheapest way to build your own private cloud.
And I know we've been starting to see more people doing that. I know Jensen Huang and Dell and et cetera have started talking about those AI factories, which is kind of a similar vein as that. I do see we got a logical hand up, though.
Yeah, I just want to say, I think what we've seen this earnings season, and obviously stocks were up a lot this year going into this Q1 print. We've seen a lot of sell-offs coming into this. What sticks out to me is obviously, the ability to guide up or down and all that nice stuff, but it's a lot easier to see a positive stock reaction if you have a good valuation going into the print. So I'm really liking a lot of the action lately because I feel like for the past year, even when we were in 2023, a lot of these software names, even at the bottom, I still felt they were pretty expensive. And then obviously they tripled, so I felt like a total idiot. But like that said, yeah. Well, not NVIDIA. Forget NVIDIA. NVIDIA is crazy. But I'm talking about more about like a lot of the software names. And I'm not saying like they should just all be, destroyed and head lower and all that. But it always felt to me like, okay, we bottomed, and it, maybe according to the historic valuations of software, it was at an extreme low point. So for that reason, it deserved that rally. But then it got right back to even more expensive than like the 2021 days. So, it's just hard to go into into an earnings season where things are definitely getting sold off because they've rallied so much this year. And you still have a very high valuation. It just sets the bar extremely high to do well, see a positive reaction. So I think it's just kind of expected at this point. But yeah, in my opinion, it's really nice to see that valuation all of a sudden it matters again. So yeah, I mean, that's what I'm focused on a lot is, fundamentals also aligning with what you're going into the print with.
I sold $35 puts in TNA today for you.
There you go. I would love to see it. Again, I think what Kevin said, we'll probably have a soft PC, which should help. Again, it just becomes a rates trade, and that's why all the chop. And to me, it's just not worth it when I have so many great ideas in the space with profitable, clean balance sheet, founder-led, growing small caps. It just doesn't make sense to me to waste. I feel like there's opportunity cost owning the index. I liked it because of, the ability to just rally straight up, especially if you ride something like TNA, but you really got to time the macro data points. Whereas if you just pick individual stocks, you don't need to rely on the macro, but you get that additional tailwind when it comes.
Kevin, I want to loop you back into the conversation and just hear your general thoughts about the day in the market and what you were watching. We kind of prompted you with some of those earnings talks, but I wonder if there was anything else on your radar today.
No, I mean, I'm just waiting. Look, the choppiness that we've seen from a technical standpoint over the last week and a half, almost 2 weeks now, right? Has it been 2 weeks? Yeah, let's say for the most part 2 weeks. I mean, it has been a little bit telling, right? We've been having these inside days, as Ed was talking about on the morning show this morning, and that's kind of like that's been just kind of the scenario. And until we break, I'll look at the SPX right now, but I mean, until we really kind of break 52.30, I don't think you're going to see any type of really like volatility type of action in the market. I mean, today we're down, 0.75%, but I mean, on a relative basis, VIX at 14, relatively, it's getting up there, but I don't think that's still like that. It's not that much vol. In my opinion, a 14 VIX is not a lot of vol. And if you think so, then cool. All right, maybe we can have that debate. But I think on a historic basis, it's not. I didn't think that the VIX was going to stay at 11 either. That shit was crazy last week. I was like, what? Like, that wasn't going to happen at all, right? And I think a 14 VIX is good. I mean, it's enough premium in there for premium sellers to get their scalps in. And there's enough that you could have from realized vol for long holders, no matter if you're going long equities or short equities, to be able to make a play. So I think we're at a pretty decent sweet spot here for right now. Going back to kind of like that refocusing on the macro data, just kind of keep in mind here, guys, like there is nothing that has fundamentally changed in the landscape over the last 60 days coming from Fed commentary and the macroeconomic data. That should actually, like, if you are concerned right now about what the Fed is saying, higher for longer, they've been literally telling us that for the last 6 months. Nothing has really changed on a relative basis. We've had inflation kind of moving to the upside, but at some point it's probably going to peak out, and I do believe that
we did pretty good on YouTube search.
Actually peaking out. A
lot of people found the live stream today on YouTube search, not some other areas.
Like we saw last last year. But I think that we
22% of you found this stream through searching on YouTube. I guess Salesforce earnings. We'll do Costco tomorrow. Should be a big draw.
Once we get to August and September of this year,
Costco earnings incoming though.
Some really favorable inflationary prints for the Fed to actually kick off the rate cutting cycle, even though I don't think they should cut, but I believe that they're going to utilize those base effects in order to do so. And I think that I don't know if that's going to really satisfy the market. Like if the labor market's still resilient at that point in time, I think it will satisfy it. But if the labor market starts to show signs of cracking, then we might have a different issue. We're not seeing the churn in the labor market in the initial claims data on a weekly basis to really translate to that being reflected in monthly numbers, and that's going to have some lag time there. So that's kind of what I'm like looking at here. I mean, I can go through a couple of sectors that I'm kind of focusing on. I think utilities had a heck of a run, but as you have these rates kind of moving to the upside right now,
why are these all over the place?
That might be there for a little bit of a fade. Just be mindful that could be another
Twitter
earnings play once we get to earnings season in the next 60 days for utilities, because out of all the sectors, in my opinion, X technology, and when I say X technology, basically X semiconductors, utilities are pretty much the only ones that I have real confidence in that are actually going to have positive organic growth, both on top and bottom line, that are going to exceed the street's expectations, just like we saw for this quarter. And I think that there should be some value there, but I think you also have to be a stock picker within that industry, because not all of them are going to be the direct beneficiaries of that environment, right? So kind of focusing on these utility companies that center around electrical generation and natural gas. I also think water utilities are going to be a seasonal play in the summer. If you're looking at the faux ETF, it is seeing a little bit of a sell-off there, but I mean, it was up like 18% year to date. We're talking about a water utility up 18%. That's remarkable, to say the least here. So I'm still looking at that. I think industrials, if you're looking at the XLI, I'm going to tell you right now,
we do have GDP
for industrials, because
probably
Deere
8:15
and Caterpillar are going to drag you down.
1 second.
Because Deere and company has agricultural headwinds when it comes to prices, even though prices have gone up. That's not enough or sustainable enough to drive orders. It's just enough for us as speculators to be able to make a profit. And when you have Caterpillar, you have certain segments in the construction space, as well as international competition that is hitting those names, and that's a very heavy weight when you're looking at the industrial sector. I also think that consumer staples, look, like they still have pricing power. Staples still have pricing power. I think that there's
if I'm up 8:15
there as well. That's kind of like where I'm at. And then uranium. I hate talking like this because it's been kind of like this fin-twit like trade, if you will, but I'll give you a fundamental case for uranium. It looks like the White House is going to really start signing off on trying to restart some new reactor or some ones that we defuncted, potentially reactivating some of those, potentially looking at having the Army do some studies in order to be able to maybe set up some smaller reactors here in the United States, and that's coming from a Democratic White House, which I think is a good thing if you are a bull.
So when you buying the Queen catalog, I saw
continue to catch
like
a
music
little
rights.
bit of steam here, and I mean, commodities, real quick. Let me just talk about commodities real quick.
This is all I saw.
Wait,
copper, I think we should. Yeah, go ahead.
When you go into this commodity thing, can you talk about the OPEC meeting that's supposed to happen over the weekend, and if you're going to do anything in anticipation of?
Yeah, well, I can't talk about my own trades. So there's speculation that OPEC is... Yeah, so I'll talk about it in broad terms, right? And maybe you can catch my drift, right? So OPEC, there's a notion out there that they're going to continue to extend their production cuts, which could be the case here. I would not base a trade on that going into that meeting. And the only reason why I say that is because there's also a rumor out there, and we'll probably see it in the next 24 to 48 hours, if it hasn't happened already, Saudi Arabia cutting oil energy prices to Asia. And if that is the case, then that does actually show a little bit of sign of weakness overseas when it comes to demand, even though we have all of these narratives that are being thrown out there. And the China narrative is a real narrative, but I think people are kind of like, China already has a fair amount of reserves themselves. They have a very robust refining operation that is there. And actually, not last month, if I'm not mistaken, but the month before that, they were like a net exporter, I believe, of oil. So like they have their own thing that they can actually like export to regional powers if they need to do that. But let's say OPEC does extend their cuts. Cool. I think the market's already kind of pricing that in. I don't think that's going to cause a dramatic bid in the energy complex. I think right now what fundamental traders are looking for is the next 3 weeks of data coming out from the API, from the EIA, and some of the other third parties that are out there to see if gasoline demand has near-term peaked, which there's a case that we're seeing small incremental increases when it comes to gasoline demand, but it's not on the trend that we have seen over the last couple of years as we started the summer driving season, which literally just kicked off this week, right? So next couple of weeks, we're going to see is the consumer going out, they're driving more, are we seeing more travel demand? Hint, what happened was American Airlines dropped their forecast, right? I think we talked about that a couple of weeks ago too. Like these airline companies, they come out on their earnings announcements and they talk a big game, and then a month later they cut their guidance. Like it's ridiculous, but whatever. Are we seeing that trend? And if that is going to be the case, then I think you have a potential bullish case for oil. But I've been looking at $80 to $85 as the right range for oil right now based on the fundamentals, and that's enough for profitability for these energy companies to be able to sustain themselves. Crack spreads have kind of fallen out of favor, trading at like $24 and some change, so we're kind of hitting a near-term area of support there. You want to see that kind of reverse. The only way you can reverse that is if crude goes down and the byproducts stay elevated where they're at right now, or you have the byproducts moving up faster than crude oil moves up. That's how you move crack spreads, right? That's how you move profitability. So that's kind of where I'm at with the oil side. Silver, it's a FOMO speculative trade right now. There's people talking about the fundamental thesis for silver, but I'm going to be, I discount that a little bit, but they're trying to kind of equate the silver trade to copper, and it's not at all. Speculators are definitely taking price action there, but they're trying to break that out. And I wouldn't fade silver, but I would, if you're not long silver now, I wouldn't get long silver at this point. I look at 25.50 as an area of support. And then copper, I think copper fades from here. I understand the fundamental thesis, but if you look at the positioning, your producers are not participating in a fashion that would say we are very short supply and the world's ending. That's not what we are seeing in positioning over the last 3-4 weeks, right? It's all speculators, it's all intraday traders that are actually pushing this move. And if you look at the chart, you kind of see some blowout candles, potentially a blow off top that occurred 2 weeks ago. We tried to recover, but I think you're seeing more selling action, buying action, and I'm looking for copper to come and come down and retest 350. Natty, I think fades. Wheat, I think, is the strongest out of the grains. I think soybean fades. I think corn stabilizes. I think wheat is the best out of the bunch, and that's basically weather-related and geopolitical. So I think we're in a holding pattern when it comes to the commodities right now. But there's nothing in the commodity space for me, from the products that I look at, that says, hey, here's the start of a new, huge bull trend like we saw for oil, or like we saw for wheat, or like we saw for whatever, right? Like everything's kind of just meandering around with the fundamentals and also with the technicals.
Ooh. Long pause. Try to get back. Sorry for cussing. No, I'm kidding. Kevin, one of our friends actually launched, our friends over at Defiance launched a 2x uranium long ETF, URAX. We'll see how that one picks up if it can get the AUM and the volume underneath it. But uranium has definitely become a little popular play we got going on here. Interesting one to keep on.
Yeah, be careful with those though, right? Be careful. The leverage ETF guys are supposed to be for short-term trades, right? So unless you're in the super cycle, and some people think that we are in the start of a super cycle right now. I don't think we are. I don't think super cycles can actually be truly started and kicked off and sustained until we have a significant geopolitical event that changes and disrupts supply chains for not just one commodity, but for several, right? If you're looking at the 9/11 through the the Iraq, and then the Afghanistan conflicts, right? That was kind of like your oil super
All right,
cycle.
chat. We're coming to the
Sustained
later parts of this.
$110 oil prices. Like that's something that had a material impact.
Where are we at?
Or if you're looking at
19.5 watch
the
hours,
minor
Paul.
super cycle that we had at the start of the Russia-Ukraine conflict,
Not bad.
and what happened to natural gas, or happened to pretty much every commodity.
Gold was 20, so
I don't
we'll hit
think
that.
we're in that type of super cycle. So just be kind of careful, right? You get 2 times the gains, and then you also have 2 times the losses, and depending on the day. You know, if you had a bad day, right? If the uranium falls off 5% one day, URA, and that thing's going off 10%, and then the next day you're up 2% on uranium, you're going to be up 4%, but that's not going to actually recoup anything. Like, you still have to do a lot more work. And the other thing, too, just to kind of note, and I think it's a good idea, right? More products, more things that we can utilize in order to capitalize on. I'm all for it. Like, throw as many products, like all the crypto products that people are freaking out, like throw them all out there. People want to degen, by all means, do it. But one thing I just kind of note, and you'll see this over time, is those double levered ETFs. Let's say that you have a flat or ranging market. Those ETFs are going to decay in value just because of the time resets. They have time resets on a daily basis. Okay, so you just have to keep that. It's like every single day, it's like you reset the position in your account, and you start off fresh. And if it goes up, it goes up. If it goes down, it goes down. And so I've seen it was very popular with those vol leveraged ETFs. Remember, it's like XIV, right? Like, remember all of that, where people were just like, oh, whatever, like vol will never actually spike ever again, and we're able to manage the overall futures curve, which no one can. But it's a good tactical product. Use it wisely, but it's not supposed to be like, I'm buying this URA 2 times leverage and I'm putting it in my portfolio for 10 years or 15 years. The time reset that you have is going against you. It's kind of like theta in a way, in a sense, right? Where the time reset that you have day by day is going against you, and it actually puts you at lesser odds of being ahead than what a lot of people think. So, long rant there, but I think it's very important as we kind of talk about those leverage products.
Definitely is very fair. These are meant to be used by people who know what they're doing the short-term trades. It doesn't give you these products are made to give you 2x leveraged on the day, so there is kind of like a rebalancing slippage that happens in there as well. So a lot of stuff to keep in mind when you're using these. But for those traders who know what they're doing, who have high conviction on the play, these are pretty interesting devices. And, once they start to get popular, like an NVDL from Granite Shares, etc., once they get the AUM to support a liquid options chain and all that stuff too, it becomes a better tool. But like Kevin's saying there, the increased reward definitely comes with increased risk. And I feel like a lot of people who don't necessarily know what they're doing might get kind of pulled in that direction. And it's not always the best thing. They're definitely meant for advanced traders, for sure. We are almost at 5 here. I don't have a hard cutoff, so I'm down to keep us moving, see how the conversation continues. All right, I know our bronchitis warrior here normally likes to talk a little bit more on the spaces and has had to pull back a little bit. When he unmuted earlier, it was kind of disgusting, clearing his throat, all that stuff. But Stock Talk, any short words of wisdom here on any of the conversations we've had today?
To be honest, I haven't listened to most of the conversations. I've just been laying down, like I've been in bed all day. But yeah, I mean, look, market's chopping up lately. Yields went up. Logical talked about this earlier. The 10-year has had quite a big rally in the past 2 sessions. That has kind of choked markets a little bit. My view on the 10-year and the equity relationship remains the same. Until that correlation starts breaking down, I think that's going to give you the most clear signal about whether equities have permission to go up or not. And that's kind of really the way I view it, as like a gateway. If you see relief in the 10-year, that's kind of a green light for equities to trade higher. If you don't, then I think this correction could continue. I think I don't know who was on here earlier and brought this up, but I think it was might have been Brian or can't remember, somebody at the start of the space. But would it be unusual for us to get a 5% correction in the S&P so soon after the one we got in April, yeah, that would be a bit unusual historically speaking, but it's not impossible. I'll continue monitoring the 10-year. I'd like to see it come back down below 4.5 after today's move. That might be hard to get. I mean, we took 4.6 today intraday. In the pre-market, we were already going higher, and that spooked equities.
20 watch hours, Paul.
Today.
There we go.
I would say another point of potential concern is the lack of follow-through in the rally of other tech names behind NVIDIA. That has been a little bit surprising / concerning the days following NVIDIA's print. But yeah, I'm just remaining patient. I mean, today we traded ASTS this morning off the Verizon news. That stock did very, very well today. So I think there's going to continue to be news, catalyst-driven opportunities, even some post-earnings driven opportunities that you can trade. But as far as the broader market goes, I think this is just another one of those spots where you just be patient a little bit.
Some fair points there. That ASTS move was pretty interesting. I was looking at it, moving higher off of some deal with Verizon this morning is what I was seeing in that area. This is I don't know how real of a company this will end up becoming with revenues and whatever, but they've definitely done some flashy stuff. This was the company that put the thing on the moon, right? That lunar rover. Am I thinking of a different company?
You're thinking of a different company, but basically the formula is anytime you have a stock that's 25 to 30% short that gets a piece of news like this, you slap it. It's just, for me, that's like a no-brainer. It was this one a couple weeks ago. We played Novavax, which went up like 150% in one day. Exact same setup, high short interest, good news. Those types of plays are like, it seems like a no-brainer. You look at it and you go, oh, well, everyone knows that thing is super short, but that goes back to like sometimes the obvious trade is the right one. If you have a stock that's 30, 35, 40% short, you get a material piece of fundamental news that increases the value of the company, that stock is going to go up a lot.
It was Intuitive Machines.
Not just 5-10%, but it's going to go up a lot. We've seen like 20 examples of this year to date. There have been a ton of examples of these high short interest names, especially in small caps, going up 60, 70, 80, 90, 100 plus % in one day. So for me, I like, as a high beta trader, I like being in those trades. So I think they present themselves more rarely than, most styles of trades. But when they're there, you take them. And today was another one of those examples.
I was thinking of Intuitive Machines. LUNR was the one that did that. But ASTS was one that I was watching today. Definitely was an interesting mover there. Stock Talk, can you do me one favor? Say, I have bronchitis. Ain't nobody got time for that. And then someone clip it below.
I have bronchitis. Ain't nobody got time for that.
All right, there we go. Let's hope we get a big meme out of this one. Would be cool. Would be good. All right. We'll throw it away from you. Let that voice rest. We got Kevin and Paper still up here. First of all, shout out to them. Make sure you're following them. Fantastic speakers. Make these Power Hour spaces so amazing each and every single day. So appreciate them and the crew and all that good stuff.
I got a DM saying to tell Stock Talk that he sounds like Bronchitis Warrior. So, good job.
Is that like a callback or something that I should know?
I don't know.
All right, we'll let it slide. We'll pretend that it didn't actually come from, like, that someone DM'd that to you and that wasn't your own thought that you just wanted to say. And hope we got a pop from. Allegedly, Paper.
Shout out to Push and Peen. True story.
Speaking of Dick's report, no, I'm kidding. Paper Gains. What are we watching for tomorrow? Anything on your radar? We have those Costco earnings, a couple earnings in the morning. There's a Canopy Growth, Hormel Foods, Best Buy, Dollar General, DG could be an interesting trader tomorrow. But what do you want? Oh, we also have the GDP report coming 8:30 a.m. Eastern. Forgot about that for a second. We'll see if the market cares about it. I know we've talked about that, and maybe they don't so much. Waiting for that PCE tomorrow morning. But yeah, you watch anything for tomorrow, Paper Gains?
I mean, in general, like I'm just. It feels like if it's a red open, it's a long. To be fair, right? I'm gonna be watching the CRM. Quite frankly, it's a big move to the downside. I feel like.
Let's go, chat. 10 likes. Appreciate you all.
A lot of these things are just heavy.
Need one more subscriber. One of you guys in the chat to
CRM
subscribe so we can hit the subscriber goal for the day. One person.
Might be justified, but
hit the bell button as well to get notified whenever we go live.
Corrections, if that makes sense. And I'm not saying that they're like heavy longs, but maybe like bounce moves, very possible.
Quick water sip.
I'm definitely interested to see if Uber can hold this move. It was a big move on Uber today. A ton of heavy flow. I don't know if you guys saw that. A lot of September calls being bought for the 70s. I went long Uber, also long Uber 70s with some time. The Apple and Amazon specifically also had a pretty nice breakout start today. So that's like first watch. So CRM possible reversals. I mean, the pre-market after our price action doesn't matter, quite frankly. So like, don't even bother looking at it. It always makes you cry. It doesn't tell you any real story. It's the pre-market price action that actually matters. So that kind of like Euro session does matter. So we do watch that in the morning to give us like the first real look. So that's going to be interesting. I was kind of interested in how this oil setup's going to play out into the weekend, but then Kevin decided to rain on my parade and crash on my dreams. So, that kind of went by the wayside. But
Palantir was just awarded an Omni contract.
What do you think? I don't mean to. I mean, dude. Now that you said that, it'll rip to $200.
It was all. It was all kind of like setting up to be
a
nice little bounce play. Quite frankly, like financials and healthcare was kind of more. Financials was looking like a bounce play possibly for me. But I've been watching. I was watching the Vance decline hitting 2,000, negative 2,000. Whenever it hits negative 2,000, honestly, it's like a buy the dip, right? And so it hit negative 2,000 today a couple times. If we open up negative 2K again, it's very likely to me. It's just like red open, hammer long, and it's probably into that PCE print on Friday. What day is today? Is it Wednesday? Yeah, so that's like into that speculation of PCE, and we'll see, right? So whatever bottom we see tomorrow, I feel like that's going to be the bottom for possibly the week. Then we rally into the thought of PCE, and then we'll see if PCE ends up being the solid news or not. But hopefully it's not, and then we just continue on. But overall, it's a very nice retest of that all-time high on SPY where we are. Just to undercut it just slightly is even better, right? So where we are is a nice technical retest of a prior breakout. So I think we're in a decent spot to reload. And I also really like gold here as an aside. I don't know if you've been looking at that. I know you talked about silver, but I like the reaccumulation on gold where we are, just starting to. But I look at like the gold volatility index, and it's coming in. So I just
look at the divergences, though, man. Like that's the only thing for that gold move. The divergences on the technical side of it, right? Especially if you look at the weeklies, is a little bit concerning. Now, if you're looking at a daily chart, you kind of got maybe a little bit of a bottoming formation in some of these indicators, and maybe we kind of push back to the upside, and that may as well be the case. But I don't know. I like looking at, like, for me, everybody's different, right? For me, I like looking at weekly charts because it gives you a little bit more insights as to, like, the longer term setup, and as well as what the producers are kind of like focusing on. And so when I look at the weekly chart and I see this bearish divergence on CCI literally since like March of this year, at some point, that's where and it's a trending market. So let me put that disclaimer out there, right? Like oscillators aren't good in a trading market, but when you break them out on a weekly chart, you kind of dampen down some of that noise, right? And so that's why I kind of use those a little bit more. But look, here's the thing that I would just look at the RSI on the weekly. Dude, like that's a huge bearish divergence that's occurring there. So
I see what you're saying, but like I have my setups too on
Oh yeah.
Anyway, it's on the volatility index that I'm looking at least the accumulation. So I just got like the first pullback. But anyways, I like that for like the first setup of possibly starting to reaccumulate. So I started there. But yeah, I think I'm looking at possibly like this Amazon setup and a couple others. But that's what I'm looking at.
Yeah, I would say like here's kind of my
Sachin,
thought
you can't hear
process
me?
over the
You can't
next
hear me?
2 weeks, right? And
Sure you can.
like I'm not the oil
No
play,
reason
dude.
you
You
guys
can
won't be
do
able
it.
to.
Usually when
Might
people
have
talk
buffered
about
there
oil,
for a
they're
little bit.
talking
My
about like
computer was being
companies,
slow.
and that's where I'm like, yeah, like
Should
if
be
you're
here
gonna
now.
actually play oil and like do oil, like
Let's check.
I think that there's more risk reward to the
I've
upside right
dropped
now than
9,000
downside
frames.
risk. And here's
That's
the
pretty
reason why I
bad.
say that: if we do
Could be
see
worse,
a
but
further
not good.
collapse in oil prices to the downside, and it goes below the
All right,
200
let's get
week moving
started.
average, which is key, dude. Like look at that on. You can go back decades. Look at that indicator. If we go below that,
You're good. You don't have to
we've
retract the
already done that for
message.
heating oil, which is slash
Who's
diesel, right?
vibing?
Like diesel's already done that, which is a recessionary. Oh, I want to say it's an economic slowdown indicator, right? That does actually is a really good leading indicator to the broader S&P 500. Yeah, we have a secular trend, but just keep that in mind. Do you think if we ever gonna
on crude, I was just like, so usually if we undercut a major, like we're under the 200
We're towards the end of the
day
spaces
simple
anyway.
moving average, right? So if we undercut it, then I'm looking for the second higher low.
You know what, chat?
Which would come in tomorrow.
I may actually end it here anyway.
Technically, if we don't make another.
Let's wait. All right. Awesome. I hope you guys enjoyed the day in the stock market, the spaces, everything like that. So I hope you guys are all doing well. Had a good day in the stock market. We'll be back live tomorrow morning. Probably be doing live for that live CPI. If you want to hear the Costco, the Salesforce,
and every day more
call,
companies are adopting Salesforce as their front office, bringing all their structured and unstructured data into our platform. Nearly half of our top 50 wins in the quarter included 6 or more of our clouds. That really speaks to the comprehensive nature of our strategy. It's incredible. And many of these customers have essential business and customer data that exists outside of Salesforce.
I appreciate each and every single one of you guys for joining in.
And
I'll be
silos.
back live
It's
tomorrow morning at
disconnected.
8:15 a.m.
That's
Eastern.
why we're
Go
seeing this
live,
incredible
probably Power Hour
momentum
2,
with our
get some
data
Costco
cloud,
live
our
earnings in
fastest
there.
growing organic, and
yeah, so stick by me.
our next
Make sure you subscribe to the
cloud.
channel, hit that
It's
bell
the
button
first
as well
step
if you want
to
to get
becoming
notified
an AI
whenever I go
enterprise.
live and when I go
Data
live.
Cloud gives every
2 times
company
I'm going
a
to be
single
going live
source of
tomorrow
truth.
most likely, so we'll see.
And you can
But
securely
yeah, I hope you all
power
had good
AI
days in the
insights
market.
and actions
I know
across the
Salesforce,
entire
some of you
customer
guys were on the wrong
360.
side of it. We'll
Now,
see
let me
what
tell
ends
you
up
why I'm
happening
excited
tomorrow.
about
Maybe
Data
we
Cloud
get the move that
and
we
why
want.
it's
And I am
transforming
moving
our
after hours,
customers
so
and how it's preparing
definitely one
them
that I'll keep an
for
eye on.
this
But
next
I
generation
appreciate
of
each and every single
artificial
one of you. I will
intelligence.
catch you all
Data
later.
Cloud was
Have a
included
good
in
one.
25% of our $1 million plus deals in the
Make sure you
quarter.
subscribe.
We
Hit
added
that bell
more than
button as well. Get
1,000 Data
notified
Cloud
whenever I
customers